Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey there, Canadian MJ friends, coming at you today with a compromise on the close. We're going to look at CGC, ACB, APH, CRON, TLRY, RIV, MBEV, same names as yesterday. We're just going to check in and follow up on them because these plays are still intact on a lot of these names. So CGC right now is giving us a beautiful tightening pattern. If anybody is going to break to an all-time high before October 17th, right now it's shaping up to be CGC. Which is surprising because they already have their deal and that's no longer in the works, but they are the sector leader, so that does make sense. What we are watching for, last we checked in, we were looking for a 4-hour higher low. We had bear momentum at the end of the day yesterday. We were looking for a 4-hour higher low compared to 48.02. We saw a solid bounce today, but the market bulls ruined things. So the S&P 500, again, we have to be aware of what the overall market is doing because without a doubt, it has an impact on the Canadian MJ sector. Today we had the FOMC. Google that if you do not know what it is. It's when the U.S. Federal Reserve sets their monetary policy going forward. They give forward-looking statements. And of course, Mr. Fed comes on and says that stocks are overvalued. Of course they're going to dump if you say that. So that's what happened. The market dumped and we saw a lot of weakness in the tech sector, in the financial sector at the end of the day. And that led to weakness in CGC. So at this point, first thing tomorrow, can the bulls hold 51.09? If they can, that's a good sign. If they cannot, we have still not found our higher low, and we're still watching 48. It's actually 47.72 as support. I got extended hours on right now for CGC. So you got to correlate these levels with WEED without extended hours, but it'll be easy to find if you look at this pattern. And 47.72, we're looking for a higher low compared to that level and watching for the potential of an hourly equilibrium, but that's only if 51.09 can hold tomorrow. Hold 51.09 and we have a potential bottom fishing play. Let's say we drop down to 51.40. I enter, I set my stop loss below $51. I'm risking about 42 cents. And if we see a bull move and look for a lower high on the hourly, the upside potential from 51.40 is, a dollar plus. So the risk to reward would be there for a bottom fishing play, but it all depends on where we open and how the first 10 minutes of trading goes. So we're going to be watching that support level, clear lower high, again, including extended hours, 53.85, another lower high at 53.43, anything under 53.43 is another hourly lower high. So the plays today, we had a really nice oversold bounce first thing this morning, and things got really extended really quickly. And so the 5-minute RSI was down in the low 20s. When I see WEED or CGC with a 5-minute RSI 20 or below, I'm a buyer. So I had my order ready to go. I said, all right, it's looking like a break of 52 psychological would be a great entry point. That would be a flush that gives the last bear push to knock out that psychological support level. And then we see a volume climax as bulls look to buy that dip as well. So I filled out my limit order for $52. As soon as $52 broke and I saw the ask was under 52, I hit enter. And the reason that I do that, someone asked while I was live, and it was a good question, why wouldn't I just put my bid in and wait for it to fill? If I put my bid in, it's going to be one of the larger bids that's in that order book, and everybody's going to see it. It's essentially like playing poker, and I'm showing everybody my hand. I don't want to do that. I want to put in my order and have it fill instantly. There have been many times where if I miss my entry and I put my order in, and people see that fat bid sitting there, they then strategize around that. So if I see a big bid, I'm going to put my order straight above it, just above it. And that's what causes the price to run away a little bit, and that's why I don't want my bigger bids to be seen. So as soon as it broke and as soon as the ask was under 52, I did a market or a limit buy order at $52. It filled under 52, and then I sold this bounce, and I only locked in 30 cents, sold a little bit early, but it was the first trade of the day. I then have the day made. That's a day maker. I could not make another dollar. I'm good to go. And what that does is it puts me in a comfortable position to be very easy going for the rest of the day. I don't feel forced to make any trades. I'm good to go. I wait for the trades to come to me, and I am very patient. So then from there, we dumped down to lower lows, so I was pleased that I took that profit, even though I could have gotten, again, I could be looking at that trade and saying, oh man, I could have gotten another 30 cents if I just held longer. when in reality, I could be saying, wow, I nailed a nice flip in a downtrend. I made my day playing counter trend, and I went back to all cash and protected against further downside. It's all dependent on how your mindset works, and I promise staying positive is going to go a lot further than staying negative. From there, we had an inverse head and shoulders pattern on the 5-minute time frame. It's a lower high, lower low pattern. Here's our lower low, just another lower high. Higher low is the right shoulder, and then the break of the neckline at 52.70 was the bull signal. And it didn't get a ton of follow through right away, and that is, as some members pointed out, because we were rejecting from 67 psychological resistance on WEED at that point. So while we broke CGC resistance by a couple pennies, we did not break psychological resistance on WEED until about 15-20 minutes later, and it took a lot of patience. We're entering a period now where if you're watching the trading day, you're saying, wow, things are slow and boring. It's going to get like this for weeks at a time, potentially months at a time. So number one, prepare yourself for that. It's going to happen eventually, but that means we have to wait longer for plays to develop. And I'm a victim, not a victim. I am guilty of not doing this myself. We're used to fast moves. We're used to tons of volume and volatility. So this bull break occurred. I entered on the bull break, patiently waited, and then we got the follow through. And I sold on this move because I wanted to take my lunch break and get off the computer. So I could have set a stop loss and done the same thing, but I wanted to lock in that profit and be 2 for 2 on CGC on the day. So that's what I ended up doing. But just watching this move play out, obviously a ton of follow through at the next leg up. This occurred because we had the annual shareholders meeting on CGC, and the bulls just love when Bruce talks. So we got a ton of follow through on that, but we gave it all back. As we know, the faster we run up without establishing supports, the faster we're going to pull back. I do not believe we would have given back the entirety of the move if SPY was not dumping. So let's just compare SPY here. There wasn't a direct correlation, but again, it's definitely affecting things, in my opinion, to see a big market pullback. It's going to be hard to stay bullish on any individual sector. So let's go CGC and SPY. And again, it is not a direct correlation, but it is certainly enough that we want to be paying attention. So here's those thick bars. Look at the high. So here's SPY's bullish reaction to the FOMC initially. High of the day is hit on SPY when CGC is just about topping out a little bit after it, 10 minutes after, and then it's just bearish action the rest of the day. And obviously CGC followed along, and then a weak bounce attempt at the end of the day. So again, the correlation is absolutely there. We're looking to October 17th. As I said, CGC is one of the more likely names to see a solid bull break and all-time highs because of where we stand in this pattern on the daily chart. But watch my market videos when I'm covering SPY, the tech sector, and the financial sector, because it is very important, and we're potentially close to losing the uptrend in SPY for the first time in, I believe, 3 months. And we're close to losing the uptrend in these individual sectors that run the S&P 500. So again, this is important for short-term action and correlations. So just to wrap up CGC, and then we'll get to these other names as I'm way too long-winded today. Hourly time frame, 5109 key support. If it holds, we have an hourly equilibrium. If it does not hold, we're still seeing the bears in control, and there's a lack of support nearby. Have to be watching market weakness. I'm watching the financial sector and the tech sector all day, every day, tick for tick with the Canadian MJ sector. ACB, as soon as we broke the low of yesterday, 1254, that's an exit signal for short-term bulls because we have no support from that point until 1236. Why sit there and sit through 1.5% of downside with zero support when you can protect those gains or protect that position? That's my mindset. We have a clear hourly lower high pattern, 1298 resistance. So 1298 is resistance. Our lower high is 1260. Anything under 1260 is just a lower high. Same thing tomorrow. If the bulls can hold 1201, we'll have an hourly equilibrium to watch. If we break 1201, there's a lack of support with the next area at 1144. So the bulls really want to hold that low of today and try and change this hourly trend. Very similar standpoint on the hourly time frame to where CGC does stand, and the daily chart is looking to establish a higher low. If we break 1144, the daily uptrend is lost. Any individual name that breaks its daily uptrend before October 17th significantly shifts the odds that we'll be able to head back to the recent highs heading into October 17th if that uptrend is lost. So 1144 is very important for ACB, and we have a lot of space on CGC's very important level down at 4802. APH, very, very tight, very at risk. No other way to cut it in terms of short-term action. Again, if you're looking months out, disregard me looking a couple days out. We have our high, low, lower high, higher low, lower high. We are very tight on the daily. We've been trading within this range for 5 days now. Volume still in this low pattern, still no spike in volume. You better believe that if we break 1857, we are likely to see a pretty solid volume spike. That's a very important level. Break 1857, we lose the uptrend and we lose this very tight equilibrium pattern. After 1857, there is a lack of support nearby. So again, names that move up really fast can move down really fast as well. So it's all about 1857 tomorrow in terms of hourly resistance. Lower high at 1988. Anything under 1988 keeps the bears in control with those lower highs. Same hourly setup as ACB and APH or CGC. There's just more on the line because if we break the low of today, that low and must hold level on the daily is right there. And again, for CGC, we break the low today, we still have 6% to work with. Completely different standing point. So it's all about 1878 and 1857, lower high on the hourly 1988. Cron continues to be one of the weaker names. Just day after day, lower highs and lower lows now, 5 days in a row. Still looking for a higher low on the daily compared to 1205, but we have to change the hourly trend for the bulls to show up. So, same pattern. Bulls have to hold 1405. If we don't, next support is down at 1357, a ways down. Hold 1405 and bull break 1495. We change the hourly trend, and that's the first signal that our daily higher low has been established. So a nice hourly tight pattern to be watching on Cron, similar to everybody else that we've looked at so far. And as far as Cron's key daily level, again, we pulled back really significantly from our high, but we aren't losing the uptrend because of how fast we ran up. So the daily higher low is a long way away still, but it's again what I said in a previous video. At this point, we're at 1447. To head to higher highs, we need over $5. We need a 35 to 40% move in the next 14 trading days to see continuation into October 17th. Every red day we see from here into October 17th decreases the odds of any continuation. TLRY, multiple inside bars. We have not gotten a break yet. Look at the volume. Still in that pattern. Very, very tight. Break is pretty much a guarantee tomorrow. And the levels that we're watching, we can just use the daily levels. Tomorrow, break of 108.77 is bearish, and it has us looking at 105.09 and 97. A bull break of 118.98 has us looking at 119.40 and 121.79. A lot of space in both directions depending on how this one breaks. This is one to definitely watch into tomorrow, and we'll see which direction this inside bar breaks. We're right in the middle of the daily range. Watch for that volume spike on the break of this tight pattern. RIV, same thing. Multiple daily inside bars, certainly favoring a bear break with how we closed today. Break of 685 tomorrow is bearish. 672 and 645 come after it. A bull break is 735 with 755 and 775 coming after it. So while TLRY is in the middle of its range, that is not the case for RIV. It is favoring a bear break, but have to wait and see that bear break occur during regular trading for it to get follow through. And last we got NBEV. Also still daily inside bars. Look at the volume. RIV volume. TLRY, RIV, and NDEV are all in the same pattern on this daily time frame. 3 daily inside bars, declining volume, looking for a break tomorrow, and NBEV is following along with RIV, closing near the low of the day. 435 breaking is bearish, 426 and 361 come after it. A bull break is 476, and then 519 is after it. So how can I look at this and say we're favoring a bear break? Compared to the close, it's 9 cents for a bear break, and we need a 32 cents for a bull break. So a lot more work required from the bulls than the bears to see a break of this range. So tomorrow, we're watching these hourly time frames on all these major names. We're pretty much in 2 groups here. The first 4 names I covered have an hourly pattern. We're watching for an hourly higher low compared to the low of today. If they can hold it, great. Nice tight hourly pattern to watch. If they cannot hold it, lower low, lack of support immediately nearby, and still looking for a support level to be established in all of these names, with APH the most at risk on its daily chart. TLRY, RIV, and NBEV, all 3 daily inside bars, tight hourly range, completely different setup. SPY is important tomorrow. The financial sector is important tomorrow. It's oversold. If we get an oversold bounce in extended hours, cool off the RSI, we can see another leg down, and we can see SPY pull back further. Let's just look at SPY really quickly. Actually, let's look at... I look at SPY on stock charts because it adjusts for dividends. Can't even go down that road right now explaining that one. But it's an artificial change in price. Let's look at SPX, the true S&P 500. SPY is the ETF tracking SPX. So SPX, this is the daily higher low, 28.86. Bulls have to hold that level. If we break it, the daily uptrend is lost. We have been in a daily uptrend since back here in June. And we will look for more significant weekly consolidation if that daily uptrend is lost. If this occurs, again, that's going to shift the odds of continuation before October 17th to less likely. So I appreciate you all watching. I hope you all have a good day. Things are getting exciting. Things are getting tight. Love to play those tight breaks. We'll see what tomorrow brings. Hope you have a great day.